Euro Options Trading by www.options-trading-education.com. Euro options trading may be a better choice than directly trading the euro as the Greek debt crisis staggers forward. The PIIGS crisis has plagued the European Union for more than a year. Sovereign debt issues in Portugal, Italy, Ireland, Greece, and Spain have threatened national solvency in these nations and have reached critical levels in Portugal and Greece. In fact, wealthier European nations had to bail out Greece a year ago and are probably going to step in again. However, the haggling that is taking place prior to expected economic assistance is taking its toll on the euro. How do options work on foreign currencies? Options in the Forex market function like stock options or commodity options in the U.S. options market. Traders buy or sell puts or calls on one currency with another. Because one buys options on one currency with another currency, there is symmetry in euro options trading that does not exist in standard stock or commodity options trading. In euro options trading, when a trader buys calls on the euro with the US dollar, it is the same as buying puts on the dollar with the euro. A call option on the euro purchased with dollars gives the buyer the right, but not the obligation, to buy euros with dollars on or before the expiration date of the contract. A put option on the dollar purchased with euros gives the buyer the right, but not the obligation, to sell dollars for euros on or before the contract expiration date. This is the same trade. When to buy calls and when to buy puts on the euro, dollar, Swiss franc, or yen will depend upon how the trader analyzes the currency market. The general consensus is that if the European Union comes through with a workable solution to the Greek debt crisis, the euro will rally and stabilize. If the incessant haggling over details continues, the euro will likely remain unstable and likely to fall further. The euro is already at record lows versus the Swiss franc and only holds on versus the dollar because of the concerns about U.S. debt and the long-term value of the dollar. The issues in euro options trading regarding restructuring Greek debt include the degree to which private investors will be involved and the concerns about market turmoil in the case of a large debt swap. Also, the recent global drop in industrial production has led many to start withdrawing from so-called carry trade investments. These are investments in which an investor in a country with low interest rates will borrow money locally, convert to a foreign currency such as the dollar, and invest outside of their own nation where profits are higher. Investors concerned about the fall in the values of stock and in the value of the euro, dollar, and other currencies are starting to sell foreign investments and return their money to their home nations. This is affecting global currency exchange rates, especially in forcing down the value of the US dollar. Because of the continuing uncertainty of the euro, as well as other currencies, euro options trading remains the most secure means of trading the euro. Engaging in options trading education regarding the euro and other currencies could be profitable as the Greek debt crisis moves slowly towards resolution. For more insights and useful information regarding options and options trading, visit www.options-trading-education.com.